Happy Thanksgiving, 11/28/2013. Happy Thanksgiving to everyone. What we are going to talk about today is we're going to talk about the S&P 500 again. And that the S&P 500 has gone from an overbought level to an extreme overbought level. We are maintaining the fact that the pullback is going to come, and that we are at levels in the marketplace in the S&P 500 were 97% percent DS. That's a public indicator, but here's the deal. That pullback that I'm talking about is coming sooner than not. Most people anticipate a Christmas rally after Thanksgiving. Tomorrow's trading on Friday, 11/29, will be a half a day. It's going to be a light trading day. So basically, we are at levels where we get either a capitulations that we've had back in year 2010. I certainly don't see that happening. We are at those kind of levels where the volatility will be very big. What do I mean by that statement? It's going to increase the volatility at these levels, and it's going to increase extremely, meaning that they're going to sell stocks. The big money, it's time where the easy money was made. It's time to sell. So one of the things that we've been monitoring very, very carefully is how do you make money on the pullback? Well, here we have options at various strike prices. So the S&P, they managed to edge it up to 1807 on a closing level. Here we can see that there was 14,940 put options at the 1805 strike and 12,951 at the 1800 strike. There were various other people buying the 1735s. So the people that were buying the 1735 put options believe that the market's going to trade down as we move into what we would say in this kind of incident, that historically speaking, that November and December are your best months. Well, November has certainly been a month where we have topped expectations. So 15,000 put options were bought at the 1735 strike price. There was 1725 put options, 9,300 were bought, and this is well below the current levels in the market. And so when we start looking at the fact that the 1700 put options on the S&P, almost 4,000 contracts traded. The 1805 strike was 14.9. So when we take a look at the open interest levels, we can clearly see that the 1750 put is where the big open interest of 151,000 contracts. Here, the open interest right across here is a 1700 put option. There's 147,000 of those put options. When we look at the put to call ratio, we can very, very much, and what do I mean by very much? I mean extremely, where the imbalances on the call side, they were buying big calls, and that they're buying the call side on the 1805s, they traded 19,000 contracts on the upside because the people that were buying over here feel that the market is going to go much higher above 18 before December 21st, because we are showing the December monthly contracts. So basically what I am saying is that the frothiness of this market is always going to be evident of who is the minority between the bull on the call side and the put side. Here is what I can tell you It's a perfect recipe that that call side of the market is going to have extreme risk. The risk levels have increased. Now everybody's expecting a big rally for Christmas, and today is Thanksgiving Day. And when we look at overbought markets, we look at how the bull has gotten back into the most extreme overbought levels than we have seen in years. Yes, the bull run has been great. However, 2013 is coming to an end. And there will be an asset allocation model where you have people who have underperformed all year are chasing stocks. You've had people who are outperforming who bought a year ago when we were at the lows in the marketplace. So basically, 1 year ago, when we were at the lows of the market, we had a nice rally. I'm just going to blow this up. I'm going to recap what happened last year. This is exactly what happened last year. In 2012, we had started off the January effect, making all-time highs right up here. I'm going to draw the trend line. This is what they did. Right there is that we started January of 2012. We ran right to the peak of the highs, and what happened is in that calendar year when we got up to the May category, and we have this on stockmarketfunding.com, when we said that there would be a fairly big correction. The bull lost all it gained. So basically, when we had that big short or that big pullback, because back in here, we were extremely overbought. So what ended up happening a year ago, irrational exuberance had played its role back at this area of the S&P a year ago. A year ago, right here, or May 527 is when we hit the bottom, and we started that next big rally up 6/3 of 2012, and we made a higher high in the bull run. And I'll draw a trend line right there. Now, as we move over, we can clearly see that that dip last year in calendar 2012, and this is a weekly chart, we made another big high and we got to a very extreme overbought. Look what happened. So as we take a look at this, this was on 11/11, the week 11/11 of 2012. So basically, you had these big pullbacks. But let's take a look. That's when we put them low in the markets 1 year ago. And here we are a year later with a very extreme overbought on the S&P. Here we were oversold. And here is what happening, and we put the bottom in the markets right in here. So we start calendar 2013 out with the gap up, and it kept running, and we got overbought up here. And we had this first pullback that we called. We have it all on the website. So if you want to go back, all you have to do is go to stockmarketfunding.com right here. Go to trading or type in the symbol S&P 500, hit go, and you're going to find out how the S&P was acting over a year ago, but in this calendar month, it's an invert process. We're extremely overbought. Stocks are not on sale. If you want to get a free trial, click on the free trial tab and get started today. Read the content and go through it. Do you want to be involved in the next bull run? It would behoove you that for the people that are on the sideline that didn't participate, you can open an account here. We'll give you buying power. Click on open an account. If you have the pattern day trading rule where your accounts are below 25,000, we can go ahead and address that and give you trading capital. Read the content, listen to the videos, and then make a decision. We're here to help. So let's get back over to the S&P. Here we rally up. When we have that first big short that we called for back in this calendar month, which would have been the month of May, 519. We said we were overbought at that level. Once we pulled back, the bull ran up here and makes another high. And we have another pullback right there in calendar 2013. And let's make that very clear that we were making new highs from every pullback in this bull run. And what I am going to show people is where we're at. And we're at all-time highs in November. As the month winds down, it's time for the big money to take profits. Stocks have had one of their best rallies in years, and people have remained to be on the sideline. Right now, we can clearly say that there's a whole bunch of money to be made on the other side of the market. And once again, there are other tools or bear ETFs that you can buy for the pullback that's coming. And if you haven't been selling into the rally, you better sell into it because we are going down. And also, calendar 2014 is not going to be like 2013. That the complacency, there is no fear, the minority. So when you look at the bull and bear percent level indexes, you've got bears down below the 20% level, down 15%. So we look at where everybody is crowding in the market at the highs. They're chasing year-end performance. The bigger institutions are going to have to ring the cash register and take profits. That's what this business is all about. It's not about holding for your whole life. I'm going to buy and hold because at certain time frames, there's going to be a big market change. And happy Thanksgiving and Merry Christmas to all of you, because after today's big feast, Thanksgiving feast, tomorrow's going to be a half a trading day, but the following week, as we close out the month, what we're going to take a look at is what the buy side and sell side programs are that will have a big impact. Just remember, people who chase performance, those are the people that are coming in late to the market. And that crowd of people has increased. And not only that, it's one of the most hated rallies in U.S. stock market history. People that were not involved in this big run and that have been on the sideline or simply didn't want to be in the market have missed huge opportunities to the upside. And another thing I'm going to say, we're over 5 years into this bull run. And I won't go into all of that history, but I will tell you that the expansion model is reaching its peaks. So beware. Happy Thanksgiving. Sell into the rally. Once again, we're going to be buying S&P put options for this pullback. And we're looking at where the minority is. The minority is in the bears. And the bulls, everybody's on the bull side. And we do know one thing for sure, that we've always taught people, is that the bull side is overcrowded, meaning that, listen, when you get a percent level of either the bears being where all the bears are in the market and you have a small minority of bulls, that's when you make big market runs. Well, it's just the opposite. It's the opposite. And that means all the bulls are all in. And so when that happens, we're going to have good correction. Stay tuned. We will be updating it. Go to stockmarketfunding.com, get your live analysis updates for free. And once again, ring the cash register. Happy Thanksgiving.